Okay, testing. Just verifying we have everything. I'm going to share my screen and we are recording right away. Good morning and welcome everyone. This is the European session. My name is Ricaurte Jaen, directly from Dubrovnik, and I think we have Mahesh, data scientist, directly from India. Mahesh, you there?
Hola, hermano. How are you?
Good, hermano. How are you? How's it going?
Doing fine.
Excellent. Can you see my screen?
I do.
Okay, perfect. So being a little bit over a week, I think you've been busy with a little bit of scientific work, and now you have some time available, and I thought it was great to connect and take a look at a few things. So I'm going to start real quick. I'm going to share with the audience one of the emails I got today, which make me think about this trading idea. I just got this one from, what's the name of this company? It's the South China Morning Post, SCMP. And the headline is this, like, Hong Kong, right, is facing a worst financial crisis over the last 20 years. Quite scary. And then I messaged you via Telegram and I say, hey, I think we have to look into going long dollar versus Hong Kong dollar. So just going to go over a little bit of the article itself. I'm also going to post it on the description of this video for everyone to read a little bit more. It's free. You don't need a subscription. But the way it looks actually is Financial Secretary Paul Chan says economy could shrink by between 4 and 7%. Now, if we take a little bit of the thesis, and I'm just going to go to the platform, MT4, this is for simulation purposes, and we'll send a few of these trade ideas to our clients. If we go back to 2019, when we were facing the drama, the saga between the US and China, the dollar versus the yuan, it went above 7, and I think all the way to 7.20 and change, just to counter trend and offset the threat of the different what it was called, remember, tariffs, all the tariffs, the different tariffs that they were applying to each other. Now, if that's the case what's happening to Hong Kong right now, well, I think we definitely have to consider that the picture we have in the monthly chart is just going to reverse. And another piece of information that I wanted to share with the audience. Let me have this back to Twitter. So look at my Twitter, and Yogi Shan, the team, one of the guys from Run Squawk, he basically said that JP Morgan, it's calling for, he said that it's calling for end month selling. This is one of the things that they are talking about. I don't know if I have it here. Let's see. I think I had it. Probably not. Oh no, it was I think it was Anthony Barton. Let me just have it from Mini Markets News. It's Barton. Okay, here it goes. He published 1 hour ago, people calling for month-end US dollar selling. So this is why, for example, this morning we had the Australian dollar trading about 65 cents. We have the pound still trading about 124, and a little bit of still strength from the euro dollar. But we know that the euro, sorry guys, it has its own issues. So that's to note. Now let's go back and just work on this idea real quick. So if Hong Kong is having a lot of hard time, then the Hong Kong dollar has to devaluate. So I will be presuming this will take a hit and go back. So if that's the case, let's see if I were to see if we can allocate some risk. Okay, so that's one standard lot. And I will be buying only based on fundamental and thinking that at least against the Hong Kong dollar, the dollar has the edge. It's a highly liquid currency, and it will provide different levels. Now, if I were just to study market cycles, there's a cycle that it has to close at this level. So that will bring it back to the 780, 770, 779, 780 range. And then the probable continuation just all the way up to close this level, to close this full cycle. That's what I will think based on fundamentals. So if I look at this from the perspective of risk reward, one standard lot, let's see how much it will yield. Pretty much we're looking at least $500 profit. You can see to the left as an estimated. You see a $544 profit. If it goes all the way up to close the cycle, the market cycle, we're looking at a $1,000 profit. Always we need to measure our risk. So if you look at this from the perspective of a 2-to-1, let's see what we can have. A 2-to-1 initially will be around 773. We'll just make it all the way down. There you go. 773.05. That will be 250. Looking to take 550. And then we just have to adjust. So that's what I have for you, Mahesh, and for the audience today in this European session briefing. A lot happening. Again, according to MNE markets and Anthony Barton in London, the institutions, they're calling for end of month selling of the US dollar. That's again, as we see in the market watch, we have Australian dollar trading about 65 cents, pound dollar trading about 124 and above 124.50, the 50 level, very important. Other US pairs, you have the New Zealand dollar trading at 61 cents, coming from 60.45, low of the day so far. And the euro dollar still trading above 108, very important to note. So now I'm just gonna stop sharing my screen. And Mahesh, I think you have something for our audience. Tell us more.
Sure, Jose. Let me just share my screen. Okay, do you see my screen now?
It's loading. Let's see.
Okay.
There you go. We see your screen now.
Okay, so on the right-hand side, I have the dollar index. So I just want to show you the sell signal was given right here. You know, the dollar index bearish sell signal from the roadkill appeared right there. And simultaneously, we also saw a buy signal on Euro USD. So the Euro USD is a specific pair that directly correlates in response to every movement in the dollar index. So that's what we're seeing here right now. What's happening here is as dollar index is going down. Oh, sorry, I had the wrong chart. GBP USD.
Right.
But let me just correct that.
Yeah, it's fine. No worries. Take your time.
Yeah. So nevertheless, we have the buy signal here. It happened at the same time. But just want to show you the distinction here. Let me just also pull up the GBP USD. So we might assume that, you know, if the DXY, the dollar index is bearish, we will also have the bearish or the bullish movement, the opposite movement on GBP USD. But we see here, though the dollar index was bearish and having a downward move, the GBP did not correspond to it. It did not do the same. But if you see, let me annotate that so that it can be better viewed. So if I annotate it, just have a look over here. It exactly mirrors the move of the dollar index, whereas GBP USD did not. So for today's analysis, I am going to exclude GBP USD, and we are specifically going to focus on Euro USD. So what's happening here is we are seeing a lot of heavy volume coming into shorting the dollar index. Just have a look at this volume. You know, even if we ignore this initial signal, and right at this candle is where it was shorted. It had a fake out. It was trying to pull back up, and immediately the selling volume came. And now we see the result. Just have a look how it's falling, and just have a look at the volume again. Good volume. So we could have entered right here on the Euro USD on this candle. Let me point it from the top. This could have been our entry. So if we enter right there, okay, we can, what I have on the chart is also the pivot points. The pivot points can help you, you know, identify certain targets. So if we had entered over here at the 1.085 level, we could have had our stop loss just above the daily pivot point. This is the daily pivot point at 1.0840. And we could target at least all the way up to the daily resistance 3. So we would be looking at a risk to reward of about 20 pips or so to 60 pips, 1:3. So as we see right now, we could have been well in profit. So I think even now we could enter in, but we need to do some kind of risk management.
Okay, perfect.
So bottom line for today is Euro USD mirrors a movement in the dollar index. We see heavy sell volumes in the dollar index. So it's time to go long on the Euro USD. Jose.
Perfect. Thank you, Mahesh. Let me have the screen and just
Sure.
guide our audience. Let me guide the audience at Marketers Daily. And this is a great time, guys. Marketers Daily, more than 15,000 members in the YouTube channel. A lot of great content. You have Ross Givens, senior editor of the Insider Report. For those of you that want to trade stocks, U.S. stocks with the edge, knowing who is buying, at what time they're buying, and the amount that they're buying, that gives you the edge. Also, if you're looking to learn more into very simple strategies, look at Ross Mullins, director of currencies, the Prodigy trading program. Every day he has his basic free analysis that you can take advantage of. And of course, our partners, our partner company, Hawkeye Traders, with Randall Lindsay and all the tools that you have seen so far, Mahesh. And week after week, video after video, you see how Mahesh has been explaining in a very simple methodology how to use. You don't need to be a genius. You don't need to be a PhD. You just need to follow instructions. Read all the information in front of you and take action. Now, just to end this video, just to finish, I'm just going to go and take a look at the idea Mahesh shared with us. We still have an opportunity. I'm just going to remove this long-term analysis, and I'm going to just go to a lower time frame. Let's take a look at M15, M30, where we can see an opportunity. And there you go. We have an opportunity in the 4-hour chart. Clearly, there's a small cycle that has to be closed, as Mahesh indicated, with the understanding that there is a massive selling of the US dollar and an opportunity triggered by roadkill on the euro dollar going long. Now, if we assess this information, we can also presume that there's an opportunity on the table to go and close this. Is it going to happen today? We don't know, of course. But if we do protect ourselves and break even the position and let it continue, we may have that opportunity to take place by in the next 2 days. That wouldn't be a surprise. So what we're going to do right now, I'm just going to, for the simulation purposes, and then send this information out to our clients. We're going to take this and let's take one standard lot, roadkill, bearish. Well, let's just go with dollar index DXY, high V, high volume. And I'm just going to buy. And our target at this point in time will be at least this half of the way of the cycle, and it will give us $622. Now, for the purpose of risk management, always understanding our worst case, what I'm going to do is just leave it like this. We're going to be buyers of the euro for the next 2 days. If the information coming also from Rand Squawk as far as fundamentals, what JP Morgan thinks about the equity markets, and also from Barton and NI Market News, Anthony Barton directly from London, there is a fundamental shift to sell US dollars at the end of April. This is in the next 2 days, next 2-3 days, and it will support us to have a more open risk opportunity. If we were to drop back to at least 1008, this level, we will be looking to take more risk around this area, and then we'll exit all positions by 107.50. That will be around this level. So, because one thing is that we don't have all the time the opportunity to be in front of the screen, I will share with you another way to trade that we use. It's very effective. So, let me just take out trades that are doing nothing. What else we have on the table? I'm going to take this dollar Swiss franc to give us enough liquidity. So first, I'm just going to drop and on the chart move to 107.50, have my fixed stop loss around this level is fine. Now I'm going to place as well a hypothetical second trade. We're going to take a little bit more risk on the second trade in case pending order buy limit, if it goes back to at least 108.10, we'll be buying that position. That will be our second trade, and the stop loss for that position will be as well 107.55. We can say 107.60, and we'll be targeting the same level, a little bit around 109.20. And okay, valid stop loss 107. Let me see what I did wrong. Buy limit. Okay, 20. I see now. Let's see now. Perfect. So there you go. We already have our trading map. It's not only to have the trading plan, but also you have the tools. Most of the trading platforms is not only for MetaTrader 4, NinjaTrader, TradeStation, and others. You have the capacity to build up your positions. That's the most important. So if you can build your positions, you can have your pending orders, have your take profits in place, and stop losses. All right? So guys, this is all we have for you. Remember, I just want to let you go with this view information we get from the newspaper. Again, the name, South China Morning Post. Hong Kong having the worst probably financial crisis in the last 20 years. This opened all doors for all of us to go long US dollar versus Hong Kong dollar. On behalf of Mahesh, data scientist directly from India, and myself, Jose Ricaurte Jaen, in Dubrovnik, Croatia, for the War Room, we want to thank you for your time. Have a great trading day, and I'll see you guys later with more analysis. Take care.